Hi everyone, Nick here recapping the day. Today is, what is it, November 17th, Monday. Another meh day. Oh my gosh, that's how many in a row. We'll look at it later. Scoreboard. The Dow is almost flat, up 0.07%, so that's like 13 points. SPX up a point and a half, so that's 0.07%, also green, although it was iffy at the close. Nasdaq, the NDX is down 0.27%. The Qs are down 0.3, so about the same. As far as the SPY is down up 0.06, just like the SPX. The one thing I paid attention to, which I highlighted in the pre-open note, were the small caps. They were down 0.8% again. So another bad day for the small caps. And worse even, they closed towards the low of the day, and I'll show you the candle on that. So that's not good, and that's 3 candles in a row. And we'll talk about that a little bit later. So the scoreboard is flat to down. I would call it that way. So who won today? Who lost? There are wins and losses on both sides as far as bears and bulls. Things I highlighted in the pre-open note that I want to circle around are the momentum stocks, so-called MOMOs, and they were mostly down. And I also mentioned the fact that they have not in 2014 been able to maintain up days more than a few hours in a row. So 2 days in a row is a tall task. Indeed, today they went crashing. Whether it was headlines driven or not, most prominently is LinkedIn down almost 4.5%, Twitter down 3%. The LinkedIn reason was that Facebook was maybe coming into its field with some work related Facebook page dedicated, so you can separate work from social. Um, if that's true, yeah, that's a beast. So yeah, I would be worried. If it's not true, I think Facebook may have done it in order to not be blocked at work more than to compete with LinkedIn. But maybe it is to compete with LinkedIn. Anyway, I'm not bullish LinkedIn. I've always said there's something shady going on in there via email. I don't know what, I don't know where, so I'm not long or short it right now. I can't do either. That's a big move. I need it to wash out before I make an opinion. If Twitter, I don't know if it's down in sympathy or what. I do like Twitter around 40. It's 40.47 right now, down 3.3%. Long term, Twitter should be a win because somebody will buy it if they can't figure it out themselves. It's too valuable of an asset, global asset. So if it's not an American company, a Chinese company, or somebody outside will gobble it up. Google today, unfortunately, was treated like a Momo almost, down 1.5%. I don't think there was any particular news, although the Facebook news kind of rubs off on Google a little bit. I'm not sure how, though. They made the leap. I don't see it. Still, the bread and butter of Google is search. And Apple, boring day, but not quite. I'll tell you why. Okay, this is Apple right here. Last few closes were strong last minute like this into the close. This is the S&P, and it usually and recently has been on the back of Apple. So today Apple opened up with all kinds of enthusiasm, ran up to here, new high 115.09. Matter of fact, there's a mistake on some of your charts that'll show $117 high. It didn't get there, it's erroneous. So it did run up to 115 and then immediately crashed. I mean, that's $2 down to 113 and 25 almost. $2 almost. It hasn't done that in a long time. A $2 move, if it's like a 1.4% eyeball. Immediately recovered, and the market came back up with it. The market came down at the same time, and I did note internally that I saw it coming because complex head and shoulder. It fell short of the ideal retracement, but it did retrace. And then as soon as it got back to here, the market with Apple, I drew this arrow and I noted that from here it has a decision to make because this is the level from which really it broke down today, right here. It tried to hang around and then whoosh down. So right here, does it recover the highs and continue fighting on, or does it think? It thought. It dropped and chopped the rest of the day, and it closed weak. little bit red, but in Apple term, that's a crash because it's been up a dollar or two. It was up 5% the whole week yesterday. So down or flat is really a crash for Apple. A missed opportunity to continue on out. So let's jump into the ES, which is the S&P. So put in kind of a cup and handle here, which is usually a bullish, and I drew this on up. An ideal target would have been somewhere around here. It fell short of the ideal target, but it's not exact science. And then it chopped around the highs. So this is bullish, right? This is the Nasdaq down here. Wasn't as bullish as here because the ES or the S&P was chopping around the highs. If I draw a box right here, this is the highs, the morning highs. The Nasdaq opened and then crashed, literally. I mean, that's 30 points eyeball to 41.91, which I believe is, I'll zoom out and see if it's lower than Friday and Thursday. And then they tried to rebound. It did, but it didn't recover the highs. It recovered the mid between the highs and the lows almost, which is about the pre-open level. So not as bullish, right? It left some money on the table compared to these guys up here. Oil was down overall, but it could have been worse. However, oil, if I zoom out, and I need to zoom out and I'll tell you why. Markets rallied today when oil rallied off the bottom. So this is quite a few days in oil, 10 days. Every dark stripe is a day. And you can see it's on a downtrend. If I say that this was an overshoot and take it out, so it's like trading down this red line right here. And it's above it now. Does it revert to it, or is it just basing in order to rebound and recover these highs up here? I don't know. Above my pay grade. It's manipulated, maybe not. I don't care. So I'm just trading it as it goes. What I care about is how the market reacts to it. Today they ran up with it, and then it closed, and let's see how it does tomorrow. The bonds were down today, and the 10-year rates were up. This is conducive for a bullish market, but we didn't take advantage of it since the markets did not close bullish. They closed flattish. So the stage was set for a run today. They didn't do it. So what happened in the morning? What was the run all about? This run up here. This was all Draghi. Draghi was talking in the morning, and he delivered the usual black belt performance in Yakido. And people bought it. He said they were willing to expand the balance sheet. They're going to buy government bonds and all kinds of stuff, even though he doesn't have the power to actually put it in place without the majority vote. And Germany has got a big muscle, and they don't want it so far until they change their mind. So yes, they have reasons to do the QE, expand the QE they have, but they haven't done it. They keep talking about it, and the markets keep running up on it. However, today they gave it right back, which hasn't happened in a while. So Draghi, and they gave it right back. So maybe I should put a candle here. And I'll add to it later, say Draghi. Now, the problem with that is Draghi talks again on Friday. So, don't know what we're going to do on Friday when Draghi talks. Don't know what he's going to say. Don't know who he's addressing, but what his topics are. But every time he talks, markets rally. And today, it didn't last too long. That's an interesting statement. I mean, note. I have a few notes, one of which was this. The other was Apple. The Apple exuberance may be waning, maybe. I mean, one day doesn't make a trend, but we'll see. We'll look at the candle and zoom out. Google today, I said, was punished. It tried to close well. It closed well, a lot better than Apple, relatively speaking, the last few minutes. Small caps closed at the low. This was the close right here-ish. So you can see down. They tried to rally, but they didn't buy it. They down. That's a bad candle. I'll show you on the chart. All right. So what happened in the Nasdaq? The last 10 days, like nothing happened. They ran and then failed. Like nothing happened. That's the Nasdaq. Small caps last 10 days. Let me zoom out here. This is the Nasdaq. Let's zoom out to 10 days. Well, it doesn't show us quite 10 days. I need to zoom out more. Okay, but I wanted to show you. 41.91 was today. Lower than yesterday, and I believe lower than Thursday, or thereabouts. Just about Thursday. Why is that important? Because it's also the high area of Wednesday, where we had a big run up on the back of Apple. So now we're like, we touched this area, so it's no longer. What if we touch it again tomorrow? Is my thinking. Okay, will it be still remain pristine? This is the area we're talking about right here. Okay, so this is a flag, but it's in an upward trend. So usually they break upwards, but you have to revisit the highs in order to do that, and they have not. The high was 42.27. Let's see if we can connect them. My eyes are really hurting today, so I may miss the right marks, but you can do it on your own. And I'll be interested to see how they handle this red line here tomorrow. So let me make it green. Why green? Because it could mean more higher prices if they can break it. And I would draw a red one down here, but there's one already. I'll use that. And here you can see higher lows, higher lows, higher lows, right? No longer higher lows, higher lows, higher lows. These are just observations of trend and appetite. And today, another thing about the momentum stocks being down so much, I mean, they were down. Let me show you a little snapshot of them. And while I'm talking, so they were down, right? So usually, if it could indicate a risk appetite or the lack thereof. So this is LinkedIn down 3.3 down on Twitter. Tesla down. I forgot to mention Tesla. I'm short Tesla. 1.9%, 1.8. Baba was down a little bit, held up better than most. If it gets hammered, I'll go long it more. I am long it. Amazon down. They should have booked profits. They, as in the longs. Priceline was down, but not by much. I mean, this is a big momentum stock, so it not being down too much in that, it's holding up well. Oh my gosh, crash. Sarcastic. Oh, CRM. Don't they report? Darn it, I missed it. I hope I didn't miss it. They report this week sometime. Chipotle was down almost 2%. MasterCard is down. I'm short MasterCard, so suddenly my short position is back alive. I'm going to add to it. VIX was up 5%. That's important. It was up a lot more in the morning, but it held well throughout the day, even when markets were trying to recover. So there are a whole bunch of signs that tell me beware, beware if you're long, beware, beware. But everybody's ignoring them. So, you know, lower highs in the recent trends of, again, my eyes are bad today, so I'm going to try to do it that way. Close enough. And lower highs, not lower lows, but not higher lows. Like these are higher lows, higher low, higher low, higher low, higher low, right here. And then suddenly now, and this was a rising wedge, these two things, and then leveling off. Maybe it's just consolidating in order to go new highs. Maybe so. I mean, more new highs, already at new highs. Maybe not. It's just looking at everything. Like I said, if I have a big pile of money and I'm not invested in the market yet, and I see all of these things, I'm more inclined to go short than long. Let me zoom out on Apple. Apple is really bullish. I mean, the way it ran up is incredible. So this is the first tick down. Not ready to panic on Apple, but I will address it. If you don't watch the whole video today, because I had a question that came from a new member today, and I think it'll serve everybody a good lesson on how to protect and how to create dividends and a good education on options. So stick with me on that one. All right, so this is Apple. I'm going to zoom back into 5 minutes. All right, let's zoom out to the day. What happened? This is a SPY. Again, this one is, I'm going to make it green, and you know now why. Because it's a chance to break out if they can bust out of it. Is this green? Maybe. I'm bad with colors. It's green enough for me. It's not red or orange. Again, we touched it. We kind of like, if you can draw a line, except for that red one right there, across the closes, right? And we had another doji going today, except they switched it, and it would have been another indecision candle. So today is not as bearish a candle as, say, having a third doji in a row. So how do I interpret this? Nothing. It's just we had a sharp rise with a big wedge. The wedge broke here, but they didn't break down. And now we're boinking, bouncing, bumping against the upper end of the trend. So these are, if you connect all the highs, so sometimes it breaks out of there. We'll see. We shall see how it ends up. Now, is this a harbinger of bad things to come? Not yet. I have to look at the whole picture. So what I look at is this is the SPY. And what if I look at the Qs, which are the NASDAQ? The NASDAQ was more bullish coming into recent days because they had a little flag. They broke out of it because it was in an uptrend. Chances are they were going to break out of it. And now they put in a red hammer of sorts. That's a doji-ish candle. It's not a good candle because it is red, obviously. Not a lot of red, but it could have been because look, it left the tail, but then they defended it, so that's somewhat positive. But it also had a head on it, which means they tried to run it and they failed, so it's kind of indecisive. So let's see what comes out next day. Who breaks the tie? Are the small caps? These three candles are incredibly bearish, in my opinion. First of all, they're three big red candles. And this one is really bad because it closed on the low of the day. You see that? There's no tail. It means they opened, they tried to run it up, they tried to sell it, they were successful, and they closed it at the lowest part of the day. That's pretty bearish. So why should listen to that? Remember yesterday or over the weekend I said this is a box you need to pay attention to because it keeps failing at the box, failing at the box, failing at the box. Well, now we're at the box and we're failing. What happens after it fails at the box? Correction. Fails at the box. Correction. Fails at the box. Correction. It's not a rule. Observation. It's happened 1, 2, 3. I'll bank it's going to happen again. More likely than new highs. So I said if it doesn't get to 120 again, like Guy Adami says that too, or that area up here would break out of the box at least, then I'm not scared being shorted. And people should listen to that, traders, because these candles here came, the green bounces off of the low recently in October, came well before the major markets decided to turn around. They're leaders. They got us to here first, fastest. They corrected down first and fastest, and they led up first and fastest. And now they're deciding to go down. Why are they not listening yet? I don't know. Blinders are still on. They're hoping Draghi will deliver something. I'm not sure. Today we had terrible news from Japan after that excellent news that they're going to put trillions and trillions of money into their economy, and yet they raise a tax. They're trying to create fake inflation, and it's not working. So, that's not bullish. So Abenomics is failing, and the Nikkei yesterday went tumbling down, so we'll see what happens today. I'm at 20 minutes almost yet, but it's really important stuff. This is macro stuff, fundamental stuff that drives everything else I do. Without understanding the price action, how can I put trades forward? And I'm sharing all my thoughts with you. And I'll tell you when you can break away, but I'm going to cover a few names just because of questions that came in throughout the day. So the observations are the NASDAQ, I shared the fact that we're close to the lows of the past days. Another observation is we've had things that are bullish markets, like a rising 10-year rate and a falling bond at the same time is bullish markets. Well, recently that relationship has broken down. The two still go inversely, which they should, like the bonds and rates go inversely. One goes up, one goes down. That's still holding up. However, their effect on the markets is not. Like today we've had, markets should have been up a lot more because bonds are down, rates are up. And then also oil. Markets are sporadically trading with oil. Of late, they wanted to run up with oil, but they don't do it 100% of the time, so sporadically. So these three things are still in play, but they're not quite connected anymore the way they were. So my question, also the important question is the weakness in the momentum stocks another coincidence, or is it really telling that the risk appetite is really low? They want sure things. They want Alibaba. They want Apple. They want, I don't want Google. I think it's a sure thing, but they're still iffy. They want Facebook. These are sure things in the minds of the traders. I'll keep an eye on that. So the close was not the same type of rally, although it didn't fade. So it wasn't quite new. What was quite new is Apple not leading into the close. So I had a question, speaking of Apple, about, but before I do that, what's up next, right? Next we have chain store sales and PPI before they open, I think, here. Also, tomorrow and Wednesday, we have more Japanese economic numbers, so likely to be bearish news, I'm guessing. and I don't know the impact on the markets. So usually we pay attention for a little bit and then we trade the day here in the US. Wednesday we have housing and China PMI flash. That's important, really important. And also Thursday we have, most important for the US, inflation and housing. Inflation, that's what determines rates, and that's what holds Yellen's hand in raising rates. So also Euro on Friday, there's economic news, and on top of it, actually before that, but on top of it, on Friday, Draghi has a speech. So God help us, more Draghi yak. All right, so having said that, Apple, somebody today said, I'm nervous in Apple. And let me show you the picture. They said, Apple, first of all, I'm sitting on profits. He said, it's killing me. First of all, this candle is wrong. See how it show 117? It's not. It's like 115 and something. He said he's sitting, it's a new member, and he said he's sitting on profits from Apple. He got assigned Apple at 80, right here. Foiled trade from way back then. He got assigned on it. He's been sitting on it. So now he's sitting on, you know, gobs of money of profits. And he's wondering what he said, it's killing me. For me, I usually, when I'm nervous, I go with the conservative, meaning book profits. And so I said, if it was my money, I would do several things. I can do several things. I can either book the profits, meaning I sell Apple and cha-ching, all of this is profits. That's a huge profit. And you know, be happy. Or if I still want to be long Apple, I book the profit and I switch the risk into a call spread for a lot smaller money and still participate on the upside. So I can book the profit, buy a call spread, or buy a call for next year, and just sit. And now instead of having, you know, hundreds of thousands at risk, I'll have 1,000, and with, you know, many more thousands to make. That's one way. Or I can buy puts and expense it in order to ride out the uncertainty period of time, and that's another way. Or I can sell calls against, these are covered calls, because I own the stock, I'm not going at risk as far as requiring margin. So if I own the stock, I can sell a 115 call or a 120 call out in time and collect money now. And if Apple does not reach that number, then that money I collect stays in my pocket. So that is creating dividends, synthetic dividends. So if I didn't need the dividends, I just want to keep the stock and participate on the upside, and I would be for another $2 or $1 if I sold the 115, for another, you know, $6 if I sold the 120s. What happens if Apple goes through the call I sold? If it closes higher, then I may be required to sell my stock at that price. So if it goes to 120 and I sold the 120, I'm forced to sell Apple at 120. Oh, cry me a river. That means I profited another $6 and I got out of my position. So it's a no-lose situation, right? And or if I collected that money and I really don't care about participating on the upside, I really want to protect. So I take the money or part of the money and I buy puts to protect me for the next week or two. So it'll be free protection. So sorry about that. I will answer that later. So the situation was a no-lose situation, and I believe the member decided to sell calls and collected 75 cents per contract. So that's 75. Let's say he did 10, then he collects $750. And if they expire worthless, meaning Apple doesn't reach 115, then that money is his, and he gets to add it to the profit. So then if Apple drops, he's got $750 to allow him to react to the drop as if he had sold it today. Let's say tomorrow it drops a little bit, then he sells it and he's got that 750 to play around with. That's just a thing. I like to book it and replace the long position with a cheaper long position. That's what I like to do. But selling covered calls is a perfect way. You have an asset, owning Apple, put your asset to work without adding risk of loss. You don't lose money by selling calls that are covered and that are higher than your current position that you're green in. Okay, if you're still shady about that, message me and I'll try to do a separate write-up. Somebody else asked me about Netflix, so let's switch to Netflix. A good question. They were thinking about an iron condor. Now Netflix is flagging. It is in an uptrend, so the flag usually breaks up to the upside. If it can take out that 390 or whatever that number is right here, let's say 397, it should it should be able to reach 410. Let's put it that way. Now, when I looked at the open interest as to what the markets are expecting, it's going to be challenged, meaning the easier path is downwards based on the open positions as of today. Now, tomorrow might be a different story, but I'll update it tomorrow. So, yesterday was red. Yes, today was red, not yesterday. But the volume was really low. It's like less than half than the 10-day average. But that is skewed because of these whoopsies. Because of these two candles on earnings. So okay volume, nothing outstanding. Let's look at it that way. And so the easier path is downwards. So they were asking about an iron condor. I don't dare short Netflix because the 13F season is not done yet. All I need is for Icon to say, oh, I'm out long Netflix and whatever. So I'm more comfortable going long Netflix around here because it defended it in a worst case scenario right here. It defended it here, defended it here. So I'd like to go long here and not yet short it. So I would look into, instead of doing weeklies, because they're dangerous, because the weeklies will force me to be right here and right here. And that's too tight for my own tastes, even in an iron condor. Okay, you get blown out and you lose 5 grand. So I'm more comfortable going along here and having time to react. So I don't mind looking at December 340, 335 and collect like 40 or 45 cents for it. So the yield is pretty nice, return on risk dollars if successful. And if I so want to do an iron condor, I'd go up to here and do an opposing trade right here for another 30 or 40 cents. So I collect 60 cents, let's say. It's more, but let's say 60 cents. Let's go 70 cents, okay? And it's about 16% return on money risk in another 30 days, 33 days, 32 days between now and December expiration. That's a pretty good return on risk. I would do that preferably over the weekly. Trying to squeeze weeklies sometimes gets bloody. It pays quick, but it hurts quick too. So it's harder to react. I have a whole bunch of other names that I wanted to run through, but I'll save them for a separate write-up. I'm running up on against a half hour here, and I really want to keep it contained. So if we zoom out, it's too early to look at the weeklies now, so I'm not going to do that because it's only one day in the week, right? But all in all, price action today wasn't as bullish as one would think, given that everything was lined up to be bullish. And sometimes that in itself is bearish, because if the game is going your way, everything is going your way in the game, bulls, and you're still tied, then the other team is likely to win in the short term because nothing is going their way and they're still hanging in there. So the coach goes into the halftime, hey, we've lost this, we've broken that, and we can't do anything right, and we're still there. So just fix this little problem here, fix this little problem here, and then suddenly we're in the game again. That's what I mean. So everything is going the bull's way. Short of a change in the fundamentals or short of another surprise bullish headline, the easier path, in my opinion, is downside more than upside. I'm not saying crash. I'm just saying that we can't continue the new highs without another reason. I mean, the bounce in the SPY, let me see, this is not normal that we can continue on up. Okay, so if we breathe here, it's not crazy. So if we breathe and down a little bit, kind of like this, and just consolidate, just gives you more oomph to go up higher. But you can't rocket like this without any consequence or new variables, new givens, a new QE, a new this, a new that, a new headline, solving world peace, oil down to $10. Yes, markets will crash for a little bit, but then they'll figure out, oh my gosh, everything's going to be so much cheaper. So Just keep that in mind. And that's what keeps me comfortable in some of the short positions that I have. I mean, I don't want to be under pressure in my short positions, which I am, but I'm not overly uncomfortable with them either because of how we got here and how fast we got here without any change in the fundamentals. So I'm a fundamental guy. Yes, I sound stubborn. Yes, I sound bearish, but I'm really not. I'm market agnostic. I like to trade the ranges, and I think we're at the upper end of the range. I don't think it. We are at the upper end of the range. If I say I trade ranges, if we get to the upper side of the range, I'm more inclined to add shorts rather than longs. I have enough shorts. I put longs. You saw me add longs today, but it's to hedge shorts. So it's not a new fundamental position for me. It's just me hedging my bet, saying, okay, if the exuberance continues on tomorrow, I want to participate a little bit. Meanwhile, I'll take a little heat on the downside and I'll close it if it starts losing money. So that's how I hedge. But I trade ranges. We're at the upper end of the range. Therefore, I'm more inclined to add shorts than longs. That's all I'm saying. All right, so Nick signing out, 30 minutes and 38 seconds.